Welcome to Life Insurance 101, presented by the Independent Life Insurance Agent Association. Today we're going to discuss what life insurance is and how it works. In today's webinar, you're going to learn what life insurance is, who's involved in a life insurance policy, how life insurance is used, and how the three main types of life insurance differ from one another and when they may be appropriate in different types of situations. So first things first, what is life insurance? Well, we'll use a dictionary definition here and say that life insurance is a contract between an insured person and an insurance company, whereupon the company agrees to pay a certain sum of money to the beneficiaries upon the insured's death. So to put that in a little bit plainer English, life insurance is a contract that says if a person passes away, somebody else gets some money from an insurance company. Now, that's pretty simple, and we probably all knew that going in, that life insurance did that. But the cool thing about life insurance is that beyond this one feature, the defining feature of life insurance, there are a lot of different things that this type of product can do. Term life insurance, universal life insurance, whole life insurance, the three main types of insurance can be configured and flexed and changed in many different ways to meet a truly shocking array of goals. So, even though this definition of life insurance is pretty accurate, there's a lot more to it than you might think from just taking a look at the surface. So let's take a little bit closer look at the people who are going to be involved in a life insurance policy. First, we have our proposed insured. This is the individual who, if they pass away, the policy is going to pay out a death benefit. Next, we have the policy owner. This is the person that's actually purchasing the policy and is going to own it. Now, a lot of times you'll see that the policy owner and the proposed insured are the same person. They're someone buying a policy on themselves. If you're working in a business environment, you may see some circumstances where a business is going to purchase a policy for a key executive or an employee, or maybe you're working where a grandparent is buying a policy for their child, and you have a different owner than you do an insured. But there will be a lot of overlap a lot of times, and you'll see the proposed insured is very often the same as your policy owner. The beneficiary is the person who is going to receive the person or entity rather who's going to receive the benefit of the life insurance policy when it pays out. This can be an individual, child, a spouse, it can be a charity, it can be a university, it can be pretty much anyone or anything. And lastly, the insurance company. This is the entity that's accepting the application for life insurance, is making an offer for coverage, and then is accepting premiums to keep that life insurance policy in force once our proposed insured and policy owner accept the terms of that coverage. If our proposed insured passes away during the term of the policy, the insurance company is going to pay out a death benefit to the beneficiary. And if our policy is one that has a cash value, the insurance company is going to be the entity that our policy owner deals with in order to access that cash value. So how is life insurance used? Well, there's a lot of different ways we can use a life insurance policy. The simplest and most obvious is to transfer or create wealth or a legacy on death. So if you have money that you want to transfer from generation to generation, if you've got $100,000 you want to bequeath to your heirs, don't just give them a check for $100,000. Put that $100,000 into a life insurance policy. Use it to get a tremendously larger benefit, and then pass that benefit on down to your heirs tax-free. Or maybe you don't have $100,000 to pass down, but if you got $100 a month, $50 a month, $25 a month, you can probably get a life insurance policy that's going to leave a little bit something behind for your heirs. You might use life insurance policy as mortgage protection. This is a type of insurance where we're just buying a little term insurance policy to cover the value of a mortgage that's been taken out on a newly purchased home. That way, if the insured passes away, like for instance, let's say the insured is a husband of a family with a wife and two kids. Insured passes away. Well, that wife and two kids, there's a stressful situation left behind. It's going to be extra hours at work, concerns about making sure those kids are taken care of. That mortgage is really the last thing they need hanging over their head. Mortgage protection is a great way to make sure that if something dreadful were to happen, that mortgage is not going to be a burden on the people that are left behind. You can also, in that same circumstance, use that insurance as a form of income insurance. If that person passes away, that's very, very sad, of course, but you have to remember, too, that their income is going to pass away as well. And that can mean a very, very serious financial situation for the family that's left behind. Life insurance can fix that problem. If you're working in a business environment, you may find a company that has a buy-sell agreement that needs to be funded with a life insurance policy, or you may find someone that's interested in a key person life insurance policy. And if you're interested a little bit more about that, check out our webinars on the Independent Life Insurance Agent Association site at iliaa.org for our Business Insurance 101 webinar. You can use life insurance with cash value to create really powerful sources of capital that you can tap in really unique ways through concepts like infinite banking, or even just using the simple cash value included in a universal life insurance policy. You can use life insurance for college planning, retirement planning, many, many more things besides. Life insurance, yeah, that definition we looked at earlier is accurate, but this is a really flexible and powerful financial tool. There are a lot of different things you can do here. It's a tremendously flexible thing, and you can make it work for you as an agent and for your clients. Now, when we're talking about life insurance, we can divide it very broadly into three main types of insurance: whole life insurance, universal life insurance, and term life insurance. Whole life insurance is the oldest form of life insurance in the world. In fact, back in the day when life insurance was just turning into a thing, when people said insurance, life insurance, they didn't say whole life insurance, because whole life insurance was the only thing that was around. Well, if you mention life insurance, of course you're talking about whole life. So this has been around for a really long time, and you'll find a lot of carriers that have got their roots back in the turn of the century era have got whole life products as their flagship product. It's a holdover from kind of back in the day. Whole life is, at its core, a very simple product. It's a permanent form of coverage with extremely strong guarantees. And typically what you'll find with a whole life policy is that you're going to pay your premiums each month, you're going to get, or each year, however you set it up, you're going to get a fantastic death benefit, and you're going to get very strongly guaranteed cash value growth as well. Now, of course, we can divide whole life down a little bit further into participating and non-participating whole life. That's a little bit beyond the scope of this discussion. But the point we want to make here is that with whole life, even though it's a fairly rigid product and has kind of reputation for being inflexible, it's important to remember that whole life insurance is used for everything from final expense up to estate planning, from the little $5,000, $10,000 death benefit policies with no cash value to the huge million dollar plus policies that have cash values that most of us would be really, really excited to be able to tap. So whole life insurance, it's a very rigid product, yes, but don't let that fool you. It can be used for a lot of different circumstances. Universal life is the most flexible form of life insurance, and as a result has the most quote-unquote moving parts. With term life insurance or whole life insurance, you know what your premium is going in. You get a quote, and then you pay that premium. It's easy. With universal life insurance, you get your policy and you have a target premium and a minimum premium and a maximum premium and a guideline premium and a level 7 pay premium, and there's a lot of different stuff going on there, and at a first glance a universal life policy can be pretty overwhelming. And the reason for that is because when universal life was originally designed back in the 80s, it was designed to be a universal life insurance policy, the only life insurance policy you would ever need. The idea was that you could buy a policy when you were young. If you needed more insurance, you just start paying a little more and get more death benefit. If you need less insurance, you just pay a little bit less and your policy shrinks. If you need cash value, you pump money into it and that grows. If you need to take it out, no big deal. It's really a very flexible product. The problem with those early universal life products, however, is that they're a little bit too flexible. And if you notice folks that have policies, universal life policies that were written back in the very early days of UL, you can see a lot of those policies are starting to quote-unquote implode right now because the cash value was not set up properly, and the end result is that these insureds have to pay much, much, much higher premiums these days than they previously did just to keep that same coverage in force. Now, why are we saying all this? The point I want to make here is that universal life is an extremely powerful tool. It's very, very flexible. It's more flexible than anything else you're going to find on the market, but it's something that needs to be treated with care. It can provide permanent protection or term life protection, 10, 15 years. It can grow cash value, or it can stay level at no cash value for the life of the policy. It can be tied to a market index. It can grow based on a declared interest rate. It can do a lot of different things. Universal Life is ridiculously flexible, and there are a tremendous number of options out there for it. You got to make sure you put them together properly, though, because a poorly designed Universal Life policy is a disaster waiting to happen. If you want to learn more about putting together Universal Life, we do have a Universal Life in-depth webinar here on the Independent Life Insurance Agent site at iliaa.org. And of course, if you want to put together a Universal Life case for one of your clients, you should always feel free to use that contact form on our site to take advantage of our underwriting and case design assistance services. Now, term life insurance is kind of the quote-unquote consumer's choice. It's the simplest form of coverage on the market today. You get your quote, you pay your premium, you have a certain amount of death benefit until 10 years from now or 20 years from now or whatever term period you buy, and then at the end of that, it's up. If you didn't die, you quit paying premiums. If you do die, the insurance company pays out a benefit. It's very, very simple. No cash value, no moving parts. You know really what you're getting into right from day one. A lot of people are going to tout the buy term and invest the difference strategy, and you may have heard that before in your career. Especially folks who have radio shows really enjoy the buy term and invest the difference philosophy. And sometimes it can be a valid approach. Term life insurance is often the right solution for your client's issues, but not always. Term life insurance is a very specific tool and used for very specific situations. And you should always make sure that just because term life insurance is typically going to be the cheapest thing that pops up on a quote engine, it's not always going to be the best choice for your client. Sometimes that permanent coverage really is needed. Sometimes it's a better idea to lock that coverage in now while they're young and healthy. Of course, term life insurance often comes with what we call conversion provisions, so that term life policies may later in their life be able to be converted to a permanent life insurance policy within that same company. But that's a little bit beyond the scope of the discussion today. If you want to learn more about that, let's get into that at our Term Life In-Depth webinar at iliaa.org. The takeaway here is that term life is going to be your simplest form of life insurance. You pay your premium and you have a death benefit for a set period of time. 10 years, 15 years, 20 years, whatever term you buy. Whole life insurance is a permanent form of life insurance. It's going to let you build cash value with very, very strong guarantees. And somewhere in between is that universal life insurance, where it's very, very flexible. There are a lot of moving parts that you can adjust and customize to do exactly what you want that policy to do. But it is important that you know what you're doing with that policy. Taking too much cash value out, failing to pay the appropriate amount of premiums, these things can lead to a policy imploding and that coverage no longer being available or becoming extremely and even prohibitively expensive. So that in a nutshell is Life Insurance 101, what it is and how it works. And believe me, we've really just scratched the surface of life insurance here. This is a financial tool that is probably one of the most underrated in terms of the different things that it can do for you that's on the market today. It's truly amazing, if you've not explored life insurance before, to see all the different scenarios that this product can fit, all the different problems it can solve, all the different things it can address. If you want to learn more about that, visit us at iliaa.org. There's going to be a Contact Us link on that site. Shoot us any questions you may have, and of course, feel free to join up as a member as well to get more in-depth training like this. Thanks for joining us. We look forward to seeing you soon.